What's up, guys? Welcome back to the channel. So in this episode, we're looking at a scalping strategy, uh, one of the best strategies I've ever seen. In this episode, we're looking at the rules of the strategy, the symbol to use it on, the time frame, the entries, the exits, and everything else. And then we'll finish off the video by looking at the backtest results, and we'll do a 20-year backtest, so that I can show you just how good this strategy actually is. So this is something that will interest you, and definitely stick around. Alright, so let's go to the chart and start things off. So here we are. We are on the Euro USD 5-minute time frame, and we'll be taking trades on in the Asian session. So I'll just go over a couple of trades so that you can see the rules that we're using. So the first thing is that we can only take buy trades with this strategy. There aren't going to be any sell trades. The next thing to note is that we'll be taking trades at midnight. So like, for example, this is taken at 12. Let's find another trade. This one as well is taken as 12. So all the rules will be taken at midnight. That is the next thing to note. Alright, and for the entry, we'll take a buy trade when the price goes below previous lows. So the previous lows are here. In the very first hour of the Asian session, if the price goes below the previous lows, which are these levels here, then we take a buy trade and we exit when the price goes above previous highs, in which case when it went above this candlestick here. So that is actually how the strategy works. It's a very simple strategy. Euro USD 5-minute time frame, taking buy trades only in the first hour of the Asian session, and we take buys when the price goes below the previous lows, and we exit when the price goes above previous or recent highs. So this is one example here. Let me just show you in the other example so that you can see their similarities. So in this case here, these are the previous lows. Price went below the previous lows. So the buy trade is all the way here because of spread. So you'll realize that the Asian session, especially the first hour, has very high spreads, and in some currencies it can go up to 20 pips spread. But in the Euro USD, you can expect around 5 pips spread. So that is the reason for this gap here. Yes, so price went below previous lows, and we closed the trade when we went above recent highs, and it went above this high here. Yes, let me just find one last trade. So you'll realize that it doesn't take a lot of trades. For example, this is one here, another one there. It doesn't take a lot of trades, but when it does, they're quality trades. Let me find another one. This one here. Yes, so one last time, the previous lows here, price went below them, and we close when price goes above recent highs. These recent highs here. So those are the trades. Those are the rules. There's nothing much to it. One last thing, in every trade, we'll put a 10 pip stop loss. So supposing we take the buy trade here, we'll put a 10 pip stop loss somewhere there at this level here, and there are no take profits. We'll just close when price goes above the recent highs. So those are the rules of the strategy. Let me just run the strategy so that you can see it in real time. Yes, so I'm running the strategy with an expert advisor, and you'll see it taking trades and closing them in real time. So for example, it has taken a buy trade here. So this is 2020 January. It takes a buy trade here. And it closed here. It took this to be the recent highs. So this is basically a break-even trade. Another buy trade here. These are the recent lows. It took a buy trade here. And it closed above these recent highs. A 10 pip stop loss here, which was taken out. Another buy trade. These are the recent highs here, and we closed with a small profit. Another buy trade, recent lows. Another buy trade. Another one. Let's just see one last one. And there you go. I think you get the idea. So that is how the strategy works. Now let's look at the results. All right, so before we look at the results, there are a couple of things to note. So the first thing, I've added the commission charges on all the trades that we'll be taking. And the next thing, I've also included the spread, the high spreads that we'll be getting at midnight. So the minimum spread in each trade will be 3 pips. So let me just show you. So as you can see, as we run the test, the spread will be a minimum of 3 pips. So it can be higher, but the minimum will be 3 pips. This to account for the high spreads that we'll be getting in the Asian session in the first hour. So with those two things in mind, let's see the results. So we'll start all the way from 2003 May. That is how far back my data goes back to. And we will see the equity curve and the drawdown for the last 20 years. So as you can see, even before it's done, it's been pretty consistent. These are the biggest drawdowns here and here. And recently the drawdowns have been more minimized. And each trade is actually 1%. So it's a consistent strategy. And the win rate, about 67%. If you're using a 3% spread on all the trades, if you get better spreads, then the win rate will increase. So this is the strategy that I had for you in this episode. I hope it takes your trading to the next level. So to get more strategies like this that will improve your trading, then subscribe and see you next time.